Hello traders, the title of the video is Mastering Elliott Rules Step 2. Are you willing to master the Elliott rules? Very good. Do you want to become an Elliott master? Very good. So the question I want to ask you is that you already know about the Elliott rules. You have been applying the Elliott rules. So you know that an impulse wave should be subdivided into 5 waves without any Elliott wave violation. All right. You know that a correction should not come to the beginning of the prior impulse wave. All right. If the trend is likely to continue. So you know all these rules and you try to put them into use to make practical day trading decision, swing trading decision, forecasting the markets, investing decision, and so on and so on, and to time the market accurately. That's why we use the Elliott wave to forecast the market, to predict the market, and to time the market, to have a bit of idea what is likely to take place. And you have been doing it for some time. So, as I've been telling traders before, all right, anybody can learn about the Elliott rule in one day. But now, the purpose of this tutorial is to show traders how we can use each Elliott rule, to make a practical trading and investing decision. So the rule that I want to talk about today, which I've been talking about before, which you already know before, and you say, Joe, you talked about it before, you are talking about it again. George, I hate you so much. You are just a stupid boy. All I want is to give me tips and tricks, to buy and sell in the financial market. Joe, you are not good for me. And I'll say to you, sorry about that. All right. So the second rule that we want to talk about is that a correction, a corrective wave, generally speaking, is subdivided into 3. This is an Elliott rule. So you ask any Elliott wave expert, they will tell you that correction is about minimum price move is free. No one will deny it. If you are denying it, if you disagree, all right, you put in the comment section. You may argue that, Joe, we have a flat correction 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. But generally speaking, a correction is about free. All right. So what does it mean? What can we do with that Elliott rule? How can you make excellent decision talking about that move? Okay. This is where I come in. Talking about a correction, what I say to traders is this. Whenever we hear the word flat correction, zigzag pattern correction, triangle pattern correction, a combination correction, triple tree, and all the blah 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 about corrective waves, all right, we need to ask the question. Anytime you see anything that you call it a correction, ask yourself, what is it correcting? There is no correction if that correction is not correcting anything. It doesn't make any sense. But sometimes you will be amazed. This is what I'm saying now. It may not make sense to some traders, but you'll be amazed. Some traders will tell you that this is the correction. Then you ask them, why is it correcting? And they can't tell you that. So if you see anything that you call it a corrective wave, and you can't find out what that corrective wave is correcting, you need to review that a wave analysis. So a correction is always correcting something. So why do we say correction should refer to number 3? The reason is a correction, take it from me, you can quote me even on Twitter, on Facebook, and say, George Trio said that. A correction means that a correction, a true correction, should be a minimum correction. Have I said you can quote me on that? You can quote me that. The reason why we say free is because all correction should be a minimum correction. Except when we are talking about a distortion, except when we are talking about a sharp correction. A normal correction should be free, which means what we are saying is that a correction should be minimum. So anytime apart from number 3, or when you hear talking about corrective wave, or we are talking about 3 representing a corrective wave pattern. All we are saying to traders is that a normal correction should be minimum. That is the reason why we say that the second wave should not come all the way to the starting point of the first wave. That is the reason why we say that the fourth wave should not come all the way in, should not come below, okay, the 50% or the 61.8% Fibonacci retracement of the third wave. A correction should be a minimum. That's why most Fibonacci traders always try to buy in a zone between the 50% and the 61.8% Fibonacci retracement level, because they believe that a correction should be minimum. The sweet spot zone is between the 50% and the 61.8% level. So referring to the Elliott wave rule that stated that 3 represent a correction is always correcting an impulse wave. That correction, any correction, normal correction, should be minimum. Referring us back to the market stable data that stated to us that the minimum price move is free. So now you understand why we say minimum price move is free. All we are saying that if it's free, it's a minimum price move. A minimum price move is usually a correction. Why? Because a normal correction should be minimum. So you may say, Joe, why sometimes the correction is not minimum? That's a very good question. All right. So because the correction is always correcting an impulse wave. So remember this. So here we are. We have an impulse wave. 1, 2, 3, 4, 5. You see, it's an impulse wave. No Elliott wave variation. You check it, everything adding up beautifully. So now you see a correction. So there is a group of traders. If it's an impulse wave, which means some people pushing the price in one direction. You remember what I said to you before, that the financial instrument does not go up or down for no reason. It's always going to a specific target level. So an impulse wave is propelling, so to speak, the price to the target level. So it's pushing the price from A to B. So the correction should be minimum to allow the price to hit the target level. If the correction is not a minimum a correction, the price will not hit the target. That's why if the second wave come all the way to the beginning of the first wave, or if the fourth wave is not a minimum correction or a normal correction and is overlapping the first wave, we can say that, all right, this is not a trend. 3 is indicated to us a correction, because the minimum price move is 3. We draw the line. If the price fails to go above 3, we will expect a reversal. Okay? A 3 represents a correction. It's correcting an impulse wave. The impulse wave is pushing the price to a target level. So the correction should be minimum. If the correction is not minimum, we can deduct something else. So suppose you are here and the corrective wave, so you count your first wave, second wave, third wave, and the fourth wave, bring the price all the way to the top of the first way. You will say to traders or your client that that trend that is starting now in my beautiful American accent has a difficulty to continue, because we do not have a normal correction. It's quite a deep correction. I think that the trend is having a bit of problem, and those who are buying are now giving up. Or if you are in a bearish trend, you will say that those who are selling are giving up because we do not have a normal correction. So, for instance, we can deduct again that if the correction is not a normal correction, we will not expect a normal continuation. But if the correction is a normal correction, we will expect a normal continuation in the direction of the prior impulse wave. Have I brainwashed you today? If you say yes, then I'm happy. All right. So let me know if you have any question or suggestion. Put in the comment section, and I always read the comment, and in due course I will be recording another video to answer your specific question. There are more that we can do about one specific Elliott rule, talking about free, minimum price move free, free representing a correction, free representing a minimum, okay, a correction, a normal correction is a minimum correction. All right. So you may say, Joe, how about a sharp correction? That is another question that I will not answer in this tutorial. All right. So if we have a correction that is the normal correction, we will not bank on the continuation. But if the correction is a normal correction, we'll expect a continuation. But remember, the continuation will be in the direction of the prior impulse wave, provided that we have no Elliott wave violation. That's why the fourth wave should not overlap the first wave. That's why we do not want the second wave to come all the way to the starting point of the first wave. Now, this is also the reason why most of the Fibonacci traders tend to buy. There are always orders between the zone of 50% and 61.8% Fibonacci retracement level of the prior trend, because the market, the Fibonacci traders understand this. They think that, okay, there was a trend, there is now correction underway. That correction should be a minimum correction. But sometimes we do not always have a minimum correction when the price will come all the way to the beginning of the trend. All right, so we will talk about that in another video, but this is it, talking about mastering Elliott wave rules, step 2. If you have any question or suggestion, feel free to put in the comment section. I always read them. People do not believe me that I read all the comments, all right? So put them there, and in due course, I will be recording another video to answer your specific question. If you think that this is another great video, all right, mark it up, then I know that, okay, George, you have done a good job today. But if it's another useless recording, let me know. And I know that, okay, the pressure is on, George. You have been, okay, bad boy today. Next time, improve. That's not what traders want. Okay, so it put pressure on me, and I keep improving my recording. But if you think that it's a great video, feel free to share with your friend on Google+, on Twitter, and also on Facebook. So you may say, Joe, why should I share it? Why should I share it with other traders? I want to keep it for myself. The reason is, if more traders know about this, they will not waste your time, and they will not mess up your trade. That's why we are sharing, okay, trading tips and tricks for free on YouTube. So if you truly think that this is an essential tutorial, share it with your friend, so more traders are aware of it, so they do not go around doing all kind of things, delaying your profit, and also sometimes messing up your trade. You remember the last time when you were completely right that the price should go up, and they put it down, taking you out before going up. So they mess you the trade up before allowing you to go up. Why should they do that? Because some of those people, even some more advanced traders, do not understand some of the things in the financial market, and they go around with a lot of money, creating all kind of distortion, all kind of things, fighting, all right, and messing up the trade of experienced traders and also of ordinary traders. That's why it's so important to share, okay, tutorial that you think that, I don't know about this before. It's very important. Everybody should know this. Share it, please. All right. So this will conclude our discussion today about mastering Elliott wave rules about step 2. I invite you to follow me in step 3, when I will be talking about another specific Elliott wave rule and how you can use it, practically speaking, to make excellent trading and investing decisions. See you in part 3. We are the TSTW24 traders talking about mastering Elliott wave rules, step 2. Happy trading to you all, and speak to you soon.